Hello and good evening, Australia. Good morning, Europe. And a warm welcome to our listeners from around the world. Welcome to our Minds and Money 5 at 5 show, part of this week's Minds and Money online global event. For those of you attending the show for the first time, the aim of 5 at 5, this is 5 guests, usually at 5 p.m. at one time zone throughout the world. It is to maintain engagement between investors and miners through a lively interactive format during the current situation. A few admin announcements before we start. To make the session as interactive as possible, please have your video switched on. To ask a question, you can either submit them via the chat function, or you can, and the chat function is at the bottom of your screen, or you can virtually wave your hand in the invite participants button. Either myself or my colleague Nick Hughes will go and unmute you, and you'll be able to ask your question live. We'll also be having some polling questions throughout the webinar where you can vote. For today's show, we have a great lineup of guests. They are Stephen Grocott, Chief Executive Officer of Pure Minerals, Brett Clark, Chief Executive Officer and Chairman of Avenira, Joachim Berlenbach, Portfolio Manager of Earth Resource Investment Group, Andrew Ferguson, Chief Executive Officer of APAC Resources, and Paola Rojas, Managing Director of Synergy Resource Capital. So let's start off today's session with today's poll. And perhaps I can ask my colleague Elaine to get the poll up on the screen. Which commodity group are you the most bullish about in 2021? Giving you a choice of five broad categories: gold and precious metals, base metals, battery metals, rare earths or bulks. And whilst you are voting, let me introduce the host for today. The host for today is David Baker, Vice President of Business Development for Elemental Royalties Corp. And he's also a member of the London Mining Club, who Minds and Money are delighted to be working with. A warm welcome to you, David.
Thanks for the introduction, Andrew. As said, VP Business Development at Elemental Royalties. We are a TSX-listed royalty company, primarily precious metals focused, and I think more recently you might have seen us acquiring a portfolio of royalties from South 32. The key one being a 2% royalty on Capricorn's Karlawinda mine, which is commissioning next year. So very exciting times for Elemental. We're here with the London Mining Club, formerly known as the AMA, Association of Mining Analysts in London, and we've been providing, networking and support for mining enthusiasts in London for nearly 50 years. Guess we're probably getting to the results of the poll, but maybe before we get the actual results, I would maybe see how our investors would have voted. Paola, what are you most bullish about for 2021?
So for me, the answer obviously changes when you consider it's 2021 or long term. 2021. I'm very strongly leaning towards gold and precious metals, just because we're still in a very uncertain time, and gold and silver mainly are gonna remain for us a big focus. That would be my answer.
That makes sense. Joachim, do you feel the same way, or do you have a different view?
Yeah, I partly agree with Paola. I feel quite optimistic regarding precious metals, but here perhaps silver more than gold, because silver, the industrial character of silver, due to the solar cell production that we're going to see, is getting more and more into the limelight. And from that point of view, I would prefer perhaps silver more than gold next year and in the long term. But I think I'm more bullish on the development of industrial metals like copper, nickel. You call them battery metals here, but I really see a shortage over the next 10 years where the copper is supposed to come from. I mean, if you look at the demand, and if you consider that it takes 10 to 15 years for a mine to build from the first borehole until it goes into production, and you make the estimates how much copper we need in 10 years time for all the electric vehicles, wind turbines and solar cells, I think you get a problem. So if I had to choose between gold and copper, I would go for copper.
Really interesting point. Yeah, I was looking at a Copper Develops presentation the other day, and they were looking at material discoveries over the last 40 years, and then versus the last 10 years. I think we've had sort of one discovery of note in the last 10 years. So exploration dynamics and development dynamics of copper, I think, are really interesting. Andrew, what's your feel for 2021, and then I guess going forward?
I'm afraid I'm following Joachim here. I think well, gold and precious have masses of appeal, and I think their day will come again, probably with vengeance for all sorts of reasons. I think, given the new president that America has chosen, I think this green wave is very much here to stay, and I think that battery metals are going to basically be the ones that we will or should see an outperformance next year. I'm not suggesting that it doesn't get in front of itself, and I think copper is sort of potentially already slightly in front of itself, but I'm very, very optimistic about things like nickel, some of the lesser known metals like cobalt, and I guess, you know, while we are still in an uncertain time, I think government subsidies will help drive that. And this is not just about individuals like all of us driving electric vehicles. This is about substantial policy shifts within countries and governments. And I think that's very real. And it's something I hope will be positive for future generations. So I think battery metals for the short term, at least, yeah.
Really, really interesting insight there. Thank you, Andrew. Maybe we can see what the consensus in the room is.
And just actually, whilst we're bringing the poll update, I'd be keen to know what would your answer to the poll be.
Well, given our revenue is 98% gold, I'll be very gold bullish for as long as we can. If they keep printing dollars like they say like they have been, I think it's pretty good for all hard commodities, to be honest.
Yeah.
But just to comment a little bit, you know, what Joachim and Andrew said, you know, long term, it's definitely, I agree with what they said. I was just, you know, trying to focus on 2021, but I do think that agree the long term potential for, you know, cobalt and everything that goes into a battery. We're gonna electrify our cities, not only our cars, but our cities, you know, more fully, and buses. And so, yeah, I agree with all of that as well for the long term.
Fantastic. So maybe let's move on to the first mining update we're going to have this evening, and that's from Pure Metals, that list on the ASX, and that's through its wholly owned subsidiary Queensland Pacific Metals, who are developing a modern battery metals refinery in northern Queensland. We've got a CEO here today, and that's Stephen Grocott. So over to you, Stephen.
Thank you very much. And the poll is a perfect introduction. Yes, so precious metals next year, but come the middle of this decade, we're really talking about battery metals. So if we can go to the next slide, thank you. So the Pure Minerals tech project is different. It doesn't have a mine. We'll be importing ore from one of the best provinces in the world, very high grade limonite ore. That's the top half of the laterite ore, which is a bit of an unloved ore because about the only home for that is high pressure acid leaching plants. There have been 12 of those in the world. One succeeded. Good investment if you're prepared to roll a 12-sided dice and hope for a 12. So there's not much of a home for it. So we will process that ore. It'll be shipped into Townsville. Great location, because when you come and visit our project, you can then go and spend some time on the Great Barrier Reef. So a bonus for you there. Into the port of Townsville, where that same ore from the same mines was imported for a number of decades. Into our processing plant, which uses a different technology called the direct nickel process. That's a nitric acid leach, dissolves everything. We recycle 98% of the acid. We produce a mixed hydroxide precipitate, conventional product, which we will then refine in our brownfields refinery through to the battery chemicals, nickel and cobalt sulfate. The good thing about this processing technology, which was actually developed about 10 years ago, is it dissolves everything else and turns everything else into a value-added byproduct. Not because we're clever, that's just a side effect of the process. So the aluminium ends up as aluminium hydroxide. We'll refine that into high-purity alumina. The iron ends up in a high-purity iron oxide. We agglomerate that into the steel industry. The magnesium ends up as magnesia, which has got widespread use. So value-added co-products, but one of the best things is that means they're not sitting in a sloppy acidic tailings dam, or in the worst case, being dumped in the ocean, as one nickel project does, and the Indonesian nickel plants were planning on doing, but they've changed their mind. So now they'll build Brazil-style tailings dams in a seismically active, high rainfall area. Not tongue-in-cheek. So we tick a lot of boxes. The reason why this process wasn't commercialized 10 years ago is because this process plugs straight into the battery market. 10 years ago, you're in the shadows of the GFC, the nickel pig iron boom, which is still the cheapest way to get nickel metal into stainless steel and alloys. But most of the world's nickel production cannot be converted into battery grade nickel. Yeah, it's in the form of nickel pig iron or ferronickel. And even sulfide projects produce a concentrate, which then go through to a matte. They're miles upstream from the battery industry. So we plug straight into that, along those green boxes along the bottom. Thanks. Next slide. So obviously we're a small company, but why would some giants like LG Chem and Samsung sign MOUs with us? And they didn't do this lightly. We've been talking to them since August. They've signed non-binding MOUs to develop binding offtake agreements. They both said, we want you to produce more nickel than your original small-sized plant. Can you do that? Our answer was, yeah, we're a small company. We just size the plant at the minimum economic unit. If we've got a cornerstone investor, then absolutely we'd make it bigger, a better capital intensity and lower OPEX. So there's recognition. They're clearly recognizing the results of our poll. They already know that. They're in this game. It's good to have two offtake agreements in development because there's always some competitive tension there as well, and it's obviously a vote of confidence. Thank you. Next slide. So the projections for nickel demand by 2030, you're talking about a CAGR of around about 30+%. So people look at the nickel market and say, well, that's got a pretty attractive growth, but it's actually the battery grade nickel that we're talking about here, because as I said, the nickel pig iron, ferronickel, etc., you need an incentive price for nickel well above $20,000 a ton. So the nickel for batteries is not coming from nickel sulfides. That's way upstream. It could come from high pressure acid leach from nickel laterites on the right, but as I said, they are high capital intensity and high risk. They don't come from the saprolite ore, which goes through nickel pig iron or ferronickel. Our project, our process technology can take either the top half of the laterite ore, the limonite, or the bottom half, the saprolite. We process it through to mixed hydroxide and then into sulfate chemicals. Thank you. Next slide. So we're really a battery game. I mean, the best way of getting exposure to the battery industry, apart from being gifted a Tesla Model S, 0 to 102.6 seconds, so that'd be very nice. But we think we're obviously a gift to the battery industry as well. And that's why LG Chem and Samsung and others are very interested in us. We believe, obviously I would say this, but we believe we are significantly undervalued. These are Australian projects. You look at all of those grey ones, they're all sulfide projects. They all claim to be linked to the battery industry, but they're all a long, long way upstream. Thank you. Next slide. And that's it. Thank you very much.
Thank you, Stephen. That was very comprehensive, given the short period of time allowed. I'll just start off with a quick question. I think it's really interesting that you're not planning to operate a mine. Maybe you could talk quickly to some of the supply agreements that you've got in place.
Yeah. So we've got ore supply agreements with two of the long-standing New Caledonian mines that we have existing relationships with. The good thing is we don't have a mine, so guess what? We are quick to market. We have very simple approvals. That's a real plus. So it will be in production well before the middle of the decade. These are mines that have been exporting from New Caledonia for many decades. And it's a great province. So simple approvals, no mine, no environmental challenges to speak of. We're zero liquid discharge and almost zero solids discharge.
Fantastic. Might invite some questions from our panel. Andrew, do you want to get us started?
Yeah, I do. I guess if it's as simple as you make out, I guess new technology always frightens me a little bit. Why has it not been done before?
Yeah, good question. It was actually piloted over a period of about 11 months on multiple ores back early last decade, about 2012 to 14.
Yeah.
And it very nearly went to commercial operation in Indonesia. But that was the time of the nickel pig iron boom, the collapse in nickel prices. So, yeah, I say to people, I'd rather be lucky than clever, and you couldn't ask to be developing a project at a better time than this. This plugs straight into the battery market. That project back then, almost 10 years ago, was going to produce a mixed hydroxide precipitate, which is well suited to go into a refinery. That market didn't really exist. It was a high cost way of getting nickel into stainless steel. Much higher cost than nickel pig iron. So it was really just a timing issue in the main. All of the unit operations in our project are all in commercial use in other industries. There's always a risk when you staple all the bits together that they might not fit perfectly well, but it's not a technology play. It's not a 1 or a 0. It's not a Nemaska lithium with a wild new technology. It's all the individual bits tried and tested, bolt them together. There is always a risk with that, but it's not a 1 or a 0. It's a 1 or a 0.8 or a 1.2.
Okay. Joachim, do you have a question for us?
Yes, Stephen, what's your capital requirements to get the whole thing off the ground? Your cash position currently, and then on the other side, what are the hurdles to entrance now for other companies to do the same? How difficult is this technology actually to reproduce and to copy?
Yeah, so multiple questions. So let's see if I can. Capital cost for our pre-feasibility study was for a 6,000 annual ton nickel plant. That was a price tag of about 600 million Aussie, so call that 350 US. If we double the size of the plant, we're yet to make that decision, but it's likely to be yes. That price would probably be about 600 million US. Capital intensity is much lower because it's just a bigger plant. It's not more units. Cash position at the moment, we've got about 3 or 4 million Aussie in the bank, and we're using that to complete some piloting to produce some market-ready samples for LG, Samsung, and others. Our feasibility study will be looking to raise about 10 million US. That'll take us through to FID late next year or early 2022. Barriers to entry. We've licensed this technology from a company called Altilium Group. They used to be known as Direct Nickel. We work in partnership with them. Their model is a royalty stream. Other people could certainly go and talk to them and talk about licensing the technology, but we are so far advanced. What's in all likelihood is that people will come and speak to us, and we would just partner with Altilium Group. They work with us in the development of the project. We're bound at the wallets. We succeed, they succeed. We fail, they fail.
Okay.
Thanks very much, Stephen. Just a quick reminder to all our participants, if you've got a question, please drop it into the chat box. Paola, what would you like to say? What comments are you?
I have 3 questions. One would be if you can elaborate a little bit more in terms of your supply agreements, how secure are those, and what are the general, or anything that you can share about that. Secondly, I know I met you sometime last year. How are you able to use what you were doing at Cleantech and all that sort of repository, if you want, of knowledge and of experience of trying to get one of these of these mines built with a little bit of trouble getting there, but with such a big potential upside.
Can I try to answer the first two questions first, because I might forget the third one?
Yeah, okay.
Or supply agreement, if you signed an NDA, we'll give you a copy of it, but we have long-standing relationships with these two companies, SMGM and SMT from New Caledonia, two of the bigger producers who have been in operations for many decades. They exported ore for many years into Townsville to the now closed down Queensland Nickel refinery, which is, of course, a totally different and very high energy process. So very stable. First name relationships with them. We visited them. In fact, we're processing some of their ore through our pilot plant at the moment. But there are many exporters of nickel laterites, and particularly looking for a home for the limonite, the top half, which they either set aside or they don't mine it if it's the top half is the top 2/3. Yeah. In terms of learning at Cleantech, they were my former employees. Cleantech are one of the very, very few companies in the world who are doing an HPAL project properly. Frankly, the rest of them, I wouldn't give you the dregs of my coffee cup for. Cleantech are doing it very, very well, but you have to be good, and it takes a long time to develop it. But the other thing is the back end of the Cleantech circuit is the same as the back end of our circuit. It's a mixed hydroxide precipitate, effectively, refinery. So the same solvent extraction technology and crystallization technology, it's no different than is done in many locations all around the world. But in some ways they're competition too. So it's always good to know the competition. But HPAL is very difficult. It's a 2.5-year construction time, and the average ramp-up time is about 5 years.
Okay. And the last one would be you've said as something very sort of definite that you don't have a mind like it's we're not gonna do that. But is there do you have as a consideration or a potential in the future to have some sort of partnership with someone developing a mine or doing that?
Yeah, there's also the potential for cross equity as well, which we're open to. We do have an exploration, relatively advanced exploration project in Papua New Guinea, which is an alternative supplier that was formerly owned by Highlands Pacific. And we're in discussions with a number of other companies, either for ore supply or for some sort of cross ownership. So we're open to all possibilities, but the quickest way to get to market is to be importing the ore.
Okay, thank you.
Thanks, Paola. I've got a follow-up question as well. So I noted that you've got MOUs with some fairly established players with Samsung and LG. Maybe you can tell us more about how you get the attention of some of these major players and what sort of verification process you need to go through.
Yeah, well, a couple of them took our full feasibility study report and full data room. Now, in countries like Australia, the MOU you'll get to very quickly, but they had a thorough 2-month study. We had probably a half a dozen detailed teleconference calls and grilling and to's and fro's. So it was a very, very thorough process. I was surprised. It's not something that I'm used to, but it's partly the North Asian culture, Japanese and Koreans. So it was a much more difficult process than I thought. So how do we, make contact with these giants? Partly our intelligence, and partly we were working through a company called Harp Capital, who have very good relationships with a lot of these Korean battery manufacturers, and so they helped open some doors for us. But I couldn't be more delighted with the relationship we have with them. They are just so professional and so open. We have open commercial discussions about the nature of our plant, the size of it, the product mix that we're going to produce, and so forth. And we have regular calls with them. In fact, we've got calls with both of them next week. We notified each of them that we were speaking to the other party as well, and they're quite happy with that. They don't want to be the only off-taker. So no, that it's great.
Perfect. And what opportunities do you, oh, sorry, go ahead.
I was just going to ask, have they paid for the privilege? How
No.
your MOU, how does that work? Do they lend technical expertise? Are they going to help you with the process? Are they going to help debt finance it?
Yeah, that is all part of the binding offtake agreement, which the next step is we send them samples, they verify the specs, then we get into the binding offtake, which could be just a straight vanilla offtake, or it could be prepayment, or there could be equity, and all of those are under consideration in the MOU.
And you say the technology is sort of you cobble it together from various known other technologies to achieve your result. What's to stop them from copying what you've got? There's obviously a lot of lateritic ore bodies around the world.
The technology, it wasn't cobbled together from a collection, it was developed. Each of the unit operations are used elsewhere, like nitric acid recovery in acid pickling plants, and that's used. So it's developed by Direct Nickel Group. They have patents. They have patents on it, and we pay a royalty with them. Those patents expire in 2028. So others could try to develop themselves, but to be honest, who wants to? It certainly is possible. Certain countries that shall remain nameless.
One I'm sitting in now.
May consider that, but the easiest way is, as long as you can negotiate a good and mutually beneficial royalty arrangement, that's the best way of doing it. And we get access to all of their information. In fact, they work with us. I had phone calls with them 2 or 3 times a week. So we technically jointly developing that.
Thank you.
I think if there's no other questions.
Actually, there was one question about barrier to entry that I don't think I fully understand. If you look at a number of the HPAL projects outside of Indonesia, they're using, to make the projects attractive, a number of them are using $9 or $10 a pound nickel price. Now, for some of them, that includes a sulfate premium. So, so it's not so bad, but they're using a pretty high price. So to me, that's a clear indication of the barrier to entry. Our C1 cost with byproducts is negative for nickel.
Brilliant. I think I've got no other questions. Thank you very much for your time. It was a really interesting presentation.
Thank you.
I think while we're waiting for our next presentation, I might ask our investors a couple of questions. Given 2020 has been a challenging year on a number of fronts, how do you go about due diligence for new investments? Given site visits are pretty well impossible. What sort of changed there, and how is your approach different from years gone by? Paola, do you want to start?
Sure. I think the main thing that has come out of this year, or the restrictions of this year in terms of due diligence, has been being able to fully utilize the local networks, or the networks in general that you have, and being able to work in locations where you've worked before. So just get in touch with someone that you know and trust, and said, look, I can't get there. Can you just go to whatever? And they could, because they were in the same country. So as soon as the stronger restrictions were lifted, we've been able to visit and do a lot of desktop reviews, and I think we've become a little bit more efficient in just using those networks and using the due diligence that you can do, the desktop due diligence that you can do. I think that would be my answer.
Perfect. Andrew, is that your experience as well, just trying to use as much sort of local knowledge as you can?
Yeah, I guess if you've been doing this for as many years as I have, as the panel has, I guess you hope you've got some relationships dotted around the world which can hold you in good stead. I mean, that said, we haven't sort of veered off the beaten path and done anything remotely dramatic. We've stuck to our knitting, stuck to names we know, companies that we know, and obviously human beings that we know, because this is a time where you could fall flat on your face. And so just, I think it's been safe to stick to people we know and trust.
Yeah,
absolutely. Joachim, has that been your and Earth's approach as well? Is sort of backing management teams that you know, or
yes,
have you got about
very much so. So I think I'm in line with Andrew also here. So we stick with what we know, stick with the project that we know. We don't go into new, unexplored, exotic projects that, I mean, there's a lot of marketing going on now currently. Also a lot of conferences, webinars and so on. You already get bombarded with new projects, and some of them seem to be attractive on first view, but I think in these times it's prudent to stay away from anything that's too exotic. And hopefully next year borders are opening up again, we can fly again and see these projects, and then it could change again.
And sorry, just a follow-up question from me, Joachim. How many projects would typically come across your desk during the course of a normal year, and how do you whittle them down?
Oh, it's normally, I would say, I mean, we get visits here in Zug in Switzerland by companies normally. I would say 5, 6 per month, something like that. And now with these webinars, we get, I think we have 2 webinars, conference webinars per week, something like, it feels like this. So we get significantly more companies that we're getting introduced to, some of them repetitively. And it's, I must say, it's a bit overwhelming, the amount of requests for meetings. It's, there's no shortage. If we want to look at new names, that's definitely possible. For us, we know the names, we know management of the companies. Like Andrew, we've been around for many years, and we know whom we want to speak to. So we can pick up the phone and call these guys ourselves. So we don't necessarily need these conferences, but there's some form of desperation also in the market currently to get close to investors.
So, like, what does a mining company need in order to go and get a face-to-face meeting with you? Because I'm kind of almost assuming, I'm just making up figures here, that you might get 400 emails a year from different mining projects, but you only may do sort of face-to-face meetings with, say, 100 of them. So how do you whittle them down from, say, 400 down to 100 that you actually need face-to-face in your offices?
Well, I mean, as I said, I mean, I stay with these companies that I really know. If I know the companies in Ontario well, and I've been out there, I mean, I've been to many projects over the last 20 years. I know the mining districts, and then I know what the geology is like. I know management, so then I have time for these guys. Generally, what I do, I say, guys, don't give me all the corporate stuff. We know that, I can read that up. Stick down to the nitty-gritty, to the technical side, which really adds value to my valuation of the company. So generally, I ask the companies to cut down on their presentations. I don't want the full 30-page slide deck to go through. But everything I can read up myself, I don't need in a conference call. But I will stick, as I said before, I will stick with those companies that I feel comfortable with already and that I know.
Okay, thank you very much for that, Joachim. Back to you, David.
Thanks, Andrew. So maybe looking forward to 2021. I think we already had a view on, your view on commodities and preferred commodities. I guess what if we're looking to participate in some of that strength, how are you positioning your portfolios to take advantage of it? I mean, obviously, you probably can't talk specifically on stocks, but in terms of the development, where they are in the development cycle, what attracts you to certain names and that you're positioning into for 2021? Andrew, maybe, do you want to start?
Yeah, I mean, we run a multiple of different pots of money this end, and I guess my principal focus tends to be on the big cash generative names, and so I'm looking for an increase in earnings to filter through from these elevated commodity prices. You started to see it actually with the golds. The golds know that they need to compete, in broad terms, with a 1.5% dividend of the S&P 500, for them to be taken more seriously by the generalist investors. And in part, they're trying to achieve that. Some of them are doing it. Some of them are actually yielding more than that 1.5%, and turning themselves into widget manufacturers, which I have to say, I think the Australian mining industry has done particularly well. Some of the bigger names, the Northern Stars, etc. Evolution have been an amazing success. So you try and mitigate risk. You try and buy steady, well-established management teams who have stuck to their knitting, who do what they say on the tin. You know, pivoting into some of the base metals, which we've done in the last couple of months. There are less names to go and pick from, particularly at that size, and you would know all of them if I were to get into them. And then I think special situations, undersea rare earths was one of the questions that nobody put their vote behind. I mean, I think rare earths is singly one of the more exciting areas, and it's part of this whole battery thematic. There are only one or two names in the world which you can go and buy. One's in Australia, which is called Linus. There's Mountain Pass in America. They're producing, they do have cash flow. If there is a hiccup with China and the rare earth market, let's put it like that, these non-Chinese rare earth companies are going to go to the moon. And so I think there are opportunities there. I mean, I think in the nickel space, you've got companies who are in Indonesia, Stephen, sorry to say, called Nickel Mines, and Stephen will know it very well. They're not doing what Stephen does, but the reality is they're going to be the go-to name for most Australian investors, and probably around the world. There's not too many substantial nickel players, or pure nickel plays, which you can get involved in. So I guess we try and sort of envisage, look into the fishbowl, see what the hell we can work out about what's going to happen in the forthcoming, 6-12 months, and place our bets accordingly.
Okay, can I just ask a follow-up question, Andrew, with regards to rare earths? I'm aware that the last rare earths boom was before I joined Mines and Money. For viewers listening in, I joined Mines and Money in 2014, and I think the last rare earths boom was around about 2011, 2012. I'd just be keen to know, Andrew, is what's different this time about rare earths that was not the case back in 2011, 2012? Is it just US-China relations, or is it sort of something else that makes you sort of talk about, which makes you mention sort of like rare earths as a potential investment theme?
I just think it's the greater acceptance and adoption of alternative energy sources, and copper is obviously spoken about a lot, but your Tesla, your battery-powered car, they have 4 motors on each wheel, and the wheels turn by use of a magnet, and magnets are very heavy in the use of rare earths. People will mention defense, etc. Well, I think that's important. But things like rare earths are used to create magnets, which in turn, helping these electric vehicles move. And it's not just EVs, as I say. I think wind is a far greater one. And so it's used in all the wind turbines, which is actually what part of the process the electricity is created from. And so I just think, the world's seemingly a little bit more on edge. Australia, China's relations seem to have soured, which I'm not quite sure really why, as a politicians, but is it the state of the world? I don't know. But, China is responsible for 90% of all rare earths. And as such, if there is a problem there, then the ripple effect will be huge.
And just bringing Stephen into the rare earths conversation, I wasn't sure if you had anything to add to Andrew's remarks.
Yeah, Andrew's absolutely right, and it's even worse for the heavy rare earths, because Linus and Mountain Pass and many of the rare earth projects out there don't have many of the heavy rare earths, which dominantly come from the China ionic clays. There are a couple of junior projects out there that I won't mention their names, but they're worth looking at, because some of those have got access to the heavy rare earths, which is an even more parlous condition. And I can't miss making a comment on Nickel Mines. They're fantastic. They're absolutely tremendous company, but they are a play into the stainless steel industry, which has got a great CAGR, an attractive investment, and they're a great company, but they don't meet the battery market.
Thank you very much for that, Steve, and thank you, Andrew. Back to yourself, David.
Thanks both. That was really interesting. Maybe Joachim, you could talk about how you're positioning yourself for 2021, and do you share Andrew's views on rare earths?
Yeah, I So firstly, we manage 3 funds, one precious metal fund, which is heavy in gold and increasingly now also in silver. We manage a commodities fund, which is focused on the junior and mid-cap space, which includes also oil and gas, but we are quite heavy here now, or we increase our position in the industrial metals. And then we've got a sustainability fund, which we started last year, where we developed our own ESG matrix. And I mean, this touches on all the topics that we discussed up to now, but especially here in Europe, investors get increasingly more conscious about ESG and on greenwashing. I mean, it's so easy to say I need copper, therefore, in order to build a Tesla, I buy rare earth elements and I buy copper companies and nickel companies. But we go one step further down, actually, based on the MBA thesis of my wife, who has developed this matrix, which was quite an eye-opener for us in our team. We now actually going back into the companies themselves, into the mining companies, and check how ESG conform are these companies really, irrespective of the amount of copper they produce. So that's going quite in detail. It's beyond the scope of this webinar, I think. But I agree with Andrew, of course, rare earth elements is incredibly important. The question is, how many companies are there? And it's very quickly, with the interest that's developing here, that that these get really hot and valuations could fall out of the window very quickly here. So if you find some good explorers, producers here, probably more in the mid space, I think it's good. It's a good addition to the portfolio. It would fit into our commodities fund without doubt. I mean, and we look at these companies, but it's it's difficult to find these companies. And then, I mean, there are rare earth element explorers in Greenland, and well, what do? You can't fly out there, you can't visit it. It's in the middle of nowhere. It's difficult. It's the topic is there. Rare earth elements. We need that in our Teslas and in our wind turbines, but it's a limited space here. But it's there's enough other stuff we can invest in now. I mean, it's I think we really, for all commodities, including oil and gas, by the way, I think we're not going to be stuck at $45 WTI oil per barrel. I can't see that. So even the oil and gas side looks quite interesting. Looking forward. So I think we're really in for a good run in commodities in general, and as equity investors, we can make interesting picks, not only in the REE, in the rare earth element space, but also.
Definitely. Thanks. Thank you, Joachim. Paola, I think you're going to get the final word. How does 2021 look for you? And I think it was an interesting point brought up. How does ESG factor into your investment thesis as well?
So we're certainly different than these guys. Not just not that we don't share some of the long-term views, as I said we do, but we're more on the venture capital side. So we pick either close to IPO or early stage companies in natural resources and technology that we feel have a good opportunity. It's risky, obviously, because anything can happen. But we do have a good system to find them, and we're gonna sort of push on the topics that we mentioned before. So gold and silver is gonna be for us really big. We're working on something really quite interesting at the moment. So I can't really say anything about that, but I can say that it's gold, no surprise. And we remain very, very interested and invested in lithium particularly. And we're just taking a couple of positions in some private companies in that space. We like cobalt. We've liked cobalt for a while. It's been a bit difficult ride, but we do believe in the long-term potential, and it's gonna turn. Eventually, it's gonna turn. We do believe that. So we're gonna keep working on that, and we do like combining or the merge between the mining sort of sector and natural resources and in general, and the technology side. So things like industrial tech and also software, and sometimes in connection with mining. You know, we do need automation, and I had a couple of meetings with mining tech companies that Minds and Money organized. So that was really interesting. We're going to keep looking into that. We do believe that the upside, you have to be very organized and very, you go in much depth when the companies are private, obviously, but we do enjoy that part, and then going with them as they go and become a public entity, which is obviously where the big catalyzer for the value is. Yeah, so that's sort of how we see 2021, and we do believe that because of the year that we've had, there's gonna continue to be, as you know, this everybody else said, there's gonna be good opportunities still available.
And I'm sorry, Paola, just a follow-up question for myself. When you talk about investing into mining tech, can you just be a little bit more specific? Are we talking about investing into big data, AI companies? Is it talking about investing into like drilling companies? Because I know there's one very, very well-known investor that I spoke to who was in the mining resources space, invested into a drilling company because they saw it as almost being like a proxy for investing into a number of mining companies, because that drilling company obviously had involvement with a number of sort of like producers. But which particular like mining tech areas attract you with regards to inward investments?
So I would say that there's two buckets. One would be a bucket that helps companies be more efficient, which obviously artificial intelligence and better ways to find what how the deposits are composed, and you know, look into the earth and see what's there more quickly and cheaply. I think that's going to be really big. And that's probably going to be bigger than the second part, which you know, you do need services like geophysics, drilling, and all that sort of support system for the space. But we think that the main or the biggest opportunity is going to be in the AI space, because it can really revolutionize how we explore and how we are finding these deposits. And at the same time, this is something that I've been talking about for a while. I do have an issue. I come from exploration, and I've seen so many exploration companies come and go with good projects, but you know, for some reason they just run out of money and off they go. So I think a model where you're combining the exploration part, and that's probably the reason why I asked Stephen that question. A model where you combine having a technology side that gives you cash flow and that helps you keep funding your operation, combining that with the mining project that has a potential and you know, that upside that you can get. I think that's combining the best of those both worlds. Because I do think there's a problem with the traditional exploration financing model. And I think it's going to be interesting to see if combining those in more frequently, which we are seeing now, it's a lot more common that companies have some sort of technology angle and that they can monetize. I think that for me, that's super interesting. Anytime I see a company that has that little nugget, makes me look twice. And I don't know if, you know, this Joachim, Andrew, and David have a similar view on that. But yeah, that's sort of, it's going to be big for me to keep looking for that.
Well, I think it was a very, very interesting answer. I think I'm just a bit sort of like mindful of the time, because I think we're coming up to the hour mark. So maybe I could probably just hand over to David, just hand back to David. I'm not sure if you've got any like closing kind of comments or closing remarks.
No, just wrapping up. Thank you, Andrew, and thank you, I guess, to our three investors, Joachim, Andrew, and Paola, and as well, yeah, for a very interesting presentation from Stephen. Thank you, and appreciate everyone staying up late on the East Coast and getting up for the European morning. So thank you very much. That was really insightful. Appreciate your time, and maybe I'll let Andrew. I'll let you wrap up.
Thank you very much for everyone's time. Thank you very much, Dave, for being such a great host. Hope that you enjoy the rest of the show. Thank you. Bye-bye.
Thank you.
Bye, guys. Thank you.